Insurance may not be the most exciting thing to talk about, but it is definitely something that needs to be talked about. First off, though, what is insurance? Insurance is a way to deal with the risks you face. When you buy insurance, you buy protection against financial losses that come out of the blue. If something bad's happened to you, the insurance company will pay you or someone you choose. Hello everyone, welcome to Success Wisdom. In this video, we're going to talk about types of insurance explained. How does it work? If you are new to this channel, do like and subscribe to the channel. We all have to pay for this annoying but necessary thing to make sure we don't go into huge debt if our house burns down, if we crash our car, or if something terrible happens. Having insurance gives us peace of mind because we know that if something bad does happen, someone else will pay to fix it. Even though this can look a little strange to someone who hasn't seen it before, I mean, if you pay $250 a month for homeowners insurance and your house burns down after only 6 months, the insurance company will pay for a new one. They built a house, which probably cost hundreds of thousands of dollars, but you would have only given them $1,500. What were they thinking? That's how insurance works. One firm, known as the insurer, provides a guarantee against the risks that may or may not materialize, while another party, known as the insured, makes payments to the insurer in exchange for protection against that risk. This is the basic concept of insurance. When a large number of individuals engage in an activity that is associated with a particular risk, the probability that the risk will materialize is reduced because it is distributed across a larger number of people but remains about the same overall. How much money an insurance company needs to invest in order to turn a profit on a certain risk that has particularly probability of occurring is one of the ways that insurance firms generate revenue. After that, we utilize the amount to compute how much each insured individual will have to pay every single month. In most cases, it is merely a matter of straightforward mathematics. Nonetheless, insurance firms make use of quite intricate models in order to calculate all of this information. We also tackle types of insurance explained. What does an insurance company do? Insurance companies don't all offer the same coverage. Most insurance companies only do one type of insurance well. This is because each company has to come up with a complicated plan to make sure they can make money, which guarantees a profit. If you thought that 1 out of 100 houses burn down every year but the real number was 5 out of 100, you'd lose money pretty quickly if you insured those houses. You'd probably charge too little for everyone's insurance, leaving you responsible for those 4 extra houses. There are many insurance companies that cover everything from cars to health to life to homes. Most people around the world have these basic insurance policies, and some, like car insurance, are required by law. You might be wondering, though, why you wouldn't just put your money in a bank account and save it each month? If nothing goes wrong, you'll have a lot more money. Well, that might be true, but then you're the one who's at risk. If you save $250 a month for a year to save on home insurance, you'll have $3,000 more at the end of the year. But if your house burns down in the next year, you'll be out of pocket for the few $100,000 that will be needed to fix it. If you're willing to take that risk, it's probably not worth it. Because of this, most people should get insurance. It puts all of the risk, worry, and financial burden on a much bigger company that can handle it. If you like this video, don't forget to like and subscribe to the channel. Let's continue to talk about types of insurance explained. When you think of insurance as just a way to pay a company to take care of your risk, you are wrong. You can start to see that. In theory, insurance could be bought for almost anything. Are you afraid that while you're toasting a cinnamon raisin bagel, your toaster will overheat one of the raisins, causing it to burst into spontaneous plasma and destroy your entire pantry full of Lucky Charms and baked beans? Well, that's an oddly specific thing. But I'm sure you could get insurance for that. If you're really attractive, you might be afraid that if you fall, you'll hit your face. Stop being attractive and feel sad because no one will like you anymore. Well, I'm sure you could also get insurance against that. This is also not too far from the truth. Because their image is a source of income, celebrities often have parts of their bodies insured. There are, however, a few more pieces to this puzzle. We should talk about reinsurance and insurance claims. How does reinsurance work? Reinsurance is what an insurance company buys when it wants to buy insurance on its own insurance policies. This isn't funny. If an insurance company realizes that they have too much home fire insurance and a hot summer is coming, they could buy reinsurance policies to protect themselves from being losses if all of their customers' home catch fire because of global warming and other things. Then the reinsurance company takes on all of the risk. This is something you have to think about. If an insurance company covered all the cars in Florida and then a hurricane destroyed them all, the insurance company might have to pay out more money than they have. When they run out of money, no one will be able to get money for their wrecked car. Reinsurance is important and necessary to make sure that insurance companies can continue to make money and pay claims when they come up. What is a claim for insurance? When it comes to claims, insurance companies don't just pay out right away. Either, if you have car insurance and show the insurance company a crashed car, they will look into it to make sure you didn't do it on purpose to get payout. If they find out you did that, it's called fraud, and if you fake insurance claims, you can go to jail. It does actually happen quite often. People see it as a way to get a big cash windfall when times are tough or get out of a car or house payment they can't afford. It does actually happen quite often. People see it as a way to get a big cash windfall when times are tough or get out of a car or house payment they can't afford. But car insurance companies hire the best investigators to make sure they don't pay out the wrong amount. So you can probably see that insurance is a big business, and you can make a lot of money if you have the right models, take on the right kinds of risk, and have good investigators to make sure you don't get ripped off. On the other hand, if something bad happens and you have insurance, it can save you a lot of money. Most of the time, insurance is a good deal for everyone involved. It helps people worry less about bad things happening, and it makes a lot of money for the companies that do it. In general, that's how insurance works. We've reached the end of another video and thank you for watching. I hope you have learned types of insurance explained. If you like this video, do give us a like, subscribe to the channel, and comment down below. Thank you and goodbye.